Focus on the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in at September 8th, 2021, and the stock market may have just peaked. Today was a wild day. Pretty confusing. We had a lot of risk off right at the bell and even across the world, despite how yesterday traded. Even though we were closed, the rest of the world did good. But what you saw with the bonds, the dollar, even Bitcoin in El Salvador, there was a lot of things, but really the bonds, and if we look at what happened in 2013, a lot of trends are playing out, so we need to talk about it. But let's not get ahead of ourselves. We still got the plays. We still have a lot planned for the rest of this week. We may even get to hear, or it's looking pretty likely that we're going to hear if Jerome Powell has another nomination and a couple of other things, so we still got to keep our head on a swivel. But I got the recap for today, everything that happened in the market, what we're looking at tomorrow, the rest of the week, the plays that we made today actually only just added to the log term, and then I got a couple of good plays, even some TLT for tomorrow. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes for open. It's the first link in the description, and it's pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. YouTube.com/the-stock-market. You can post the plays, see the plays, watch the watch list come to life, and yes, if Fradley Brizzle and the Peach does not hit the same but gets you just as excited and brings a smile to your face, then yeah, we are the place to be. And the most important thing you need to do, shout out to Bradley Frizzle, post or watch this below, let us know what you're looking at, got any plays, comments, remixes, anything. I forgot to say, yeah, just post it below. Shout out to chat, come on, and let's get some good random plays, but it's over now, okay? Yeah, so right off the bat, as far as what you got today, though, this risk-off attitude kind of came out of nowhere, but the moves in the bonds and the dollar, it's hinting at some other things. I'm going to show you guys a couple of charts here. I mean, it's definitely something you're going to want to stick around for because it is putting the market in a very interesting position, but how you saw today develop, it was very, very awkward, and you saw that offensive or the defensive offensive names, the big tech, they led the way, and what we really got out of today was that question we talked about last week. We said if the jobs report was bad, the market may like that, but now the confusing part is going to be it may bring back these questions of, okay, has growth really peaked? And well, sure enough, it looks like today that was part of the sentiment and what we saw bring the markets down. And on top of that, what kind of makes it worse, there's no data this week that could really change that. We are going to get the job openings, and that will tell us something, but if anything, that could probably make this situation worse as opposed to kind of providing something that the market could spin in a positive direction. So coming into your first pretty picture here, there's a couple of things we need to talk about as far as what you saw today. And again, with what you see with big tech, those offensive or defensive offensive names, Amazon, Apple, Microsoft, Netflix, those have led the way, and now above the S&P, even more than the value stocks, they are coming back, and pretty much the moves in just those names are really carrying a lot of weight. So as we move forward with the rest of the week, watching the market breadth, anything as it does develop here, even though we could talk about the market peaking, not necessarily saying something immediate. Again, as we get to the bonds, you'll see what I'm talking about here, but this trend of these big tech names, and now if they start to lead the way above value and everything else, this is definitely telling you stuff about how economists are viewing the economy in both the short to midterm in the next year or so. And now coming into what else we saw today, it brings us here to China. So I have another pretty picture here for you, and this is showing you the Evergrande situation. Evergrande is one of the largest Chinese real estate firms, but you've probably heard headlines over the last pretty much few months, and they are pretty bad, and the situation is getting worse. And the truth of the matter is China's government could stop it whenever they want. They could bail them out. They could do what they've done in the past and not let the situation get bad. However, given this common prosperity and what we've been seeing, it seems like the government is kind of leaving them on their own, and they might let them fail. We will see what happens, but we did get good data out of China today. Their trade data bounced surprisingly. A lot of people weren't expecting that, but now with this bond situation and now how it's tying into our currency and everything else I'm about to show you here, I definitely think that this China Evergrande situation is pretty much starting to creep into the market. Now, this could bring up some of these concerns about peaking growth. And why I say that here is because if you look at this chart, what it's showing you, the 1 week change in gray, and orange is the 1 day change, but you're noticing here the Chinese bond yields are actually going halving havoc as it relates to real estate, and there is a lot of American investors in other funds. They're pretty much now getting less than $50 on the dollar of every investment they made, and that's what the situation as it is now. Depending on how it plays out from here, it could really clap a lot of people or some funds who have gotten into this fixed income trade. We talked about this one yesterday, but you're not going to hear about it till Thursday, but it seems like a lot of investors are starting to get worried about that now overseas, so that was the key. But one thing that we really saw come out of nowhere today was Delta and the virus. It's kind of being brought up as part of this, wait, growth could be peaking. People are worried about Delta, but I do think right now and this is just my opinion, the underlying global fundamentals, like the Evergrande and China situation, they are more important, and if growth really is going to peak in some way, it would still parallel what we saw in 2013, what I'm about to show you, as opposed to just being because of Delta or the virus and what we're dealing with. What I'm trying to say is we have definitely seen this before in history. And what I'm talking about exactly is pretty much after 2013. I'm going to show you these charts, but after the great financial crisis, we had about 2 years of recovery, from 2010 leading into like late 2012, early 2013. They started to have their own taper tantrum. But at the same time, you saw economists do exactly what they're doing now, where they started to downgrade growth expectations after stimulus starts to run out and people start to change their expectations. Now, coming into the main event for today here, this is what I want to show you. This is the bond chart from 2008 all the way to 2015. These are the real yields, and then this is what we've pretty much seen in the last year or so. And what is so important about this is pretty much what you saw here today. The bond yields started to creep up out of nowhere, and it was very weird. The dollar started to move up as well. You had people kind of looking for safe havens. There was a lot going on, but the real consensus since the jobs report is that the bonds have been an absolute head scratcher. People don't really know what's going on because you have the yields going up ever since they've talked about tapering, and it just doesn't really make that much sense. It doesn't matter which side you're on. Again, we've talked about, okay, maybe the Fed has to leave, but day by day as this starts to play out, people are getting a little bit more confused. And what we talked about a little bit ago, we talked about the bonds hitting the bottom. So if you guys remember right here, middle of July, early August, even if I show you on TLT, you'll see it a little better. This little pop right here, I don't know if you guys remember, we were talking about this being the bottom in yields. Remember, I sold those plays, then it came down, then it shot back up. It did a lot there for the most part, but some people are arguing that this would be the bottom on yields. And now coming back to the chart, this is what you're seeing. That was that bottom right there. Then the yields are starting to come back up. But now this is just the last 2 years. But let's come back to what we saw during the last taper tantrum. It pretty much played out very, very similar. You had 08 and 09. This is pretty much at the peak of the crash there. And then the rates started to come down by 2010. And then you had a little bit of a pop, and then it sold off, causing this rundown. It looks a lot like the bond yields that we've seen. And then you had about 2 years coming down. Then all of a sudden, it got into this formation where it pretty much bottomed out, started to run up off the bottom, and then everything went from there. And with the rates bottoming and going back up, this is both good and bad for economic recovery, because it means that if the yields come back higher, that means the economy is slowing down, but then that would warrant more stimulus. But now we're talking about tapering. It fits into this line of the confusion here. So essentially, people are now getting worried if this repeats, because what started happening, if you start to get the bond yields bottoming out and you don't see them go any lower and they start to pick up and create some sort of trend like this is when a lot of the economists, and just like we saw yesterday with Goldman, they're going to start downgrading economic expectations. And if anything, this just goes hand in hand. You could blame Delta, you could blame whatever you want, but if those yields bottom and start going up, that is pretty much going to signal the peak of your economic recovery. So factoring in China, their bond situation, and everything else going on, this is definitely taking weight. And now, depending on how this week plays out, the week after that, we're going to get Powell. A lot of things could happen, but this question of growth peaking, it is probably going to be now the most important thing, and it could outweigh the tapering, as it could mean that this taper talk might produce a stronger reaction than we first anticipated. So I hope you're ready. But coming into the company news and events for tomorrow, the first thing that took over, and even what we saw today, El Salvador, they had their historical launch of accepting Bitcoin as legal tender. They are the first country to do so. They didn't make Bitcoin their primary currency. However, they have accepted it and recognized it as a real currency for the most part. So nobody in the world has ever done this, believe it or not. So kind of shows you how early you are in the crypto space. But nonetheless, there was a lot of technical issues. If you watch Bitcoin, it was absolutely disgusting. One of the biggest drops out of nowhere, and this happened on the first day of their rollout. They did have to shut down some of the wallets, which was weird. The president of El Salvador literally made a tweet saying he bought the dip. He even tagged the IMF, and there's a lot going on with it, even just El Salvador as a country, but the effect it's had on Bitcoin, everything else. Where we go from here is going to be key. A lot of analysts talked about it, but quite frankly, if you want to see the real effect, it's going to happen about 12 weeks from now as we see the rollout get smoothed out, and that's even what Novogratz said. But when you do look at the situation, remember, we heard the El Salvador stuff about 2 months ago, and then think about everything that's happened since then. You had Visa get in on the NFT wave. Amazon said they're looking for someone. Walmart hired a senior director. The whole key in this last 2 weeks or 2 months was all about the institutional investors getting on board. So it's been an interesting development. Where it goes from here, it will definitely get more interesting, and retail is already back on board, and that's what some people are saying caused the move today. But definitely watch that. That one was very important. The next piece of news, and this one was also very important. I kind of overlooked it, but seeing about how people talked about it, this could even lead to a play tomorrow. But Ford has hired the former Apple car chief, David Field, and this is just a big update for the company, because now this is showing a lot of people they could compete with this space, because David Field, he has been a part of even Tesla. He was partly responsible for the launch of the Model 3. Again, what he did with Apple and everybody else, he just has a good Silicon Valley background, and a lot of analysts are looking at this as giving life to the whole EV race and where Ford stands. So that one is very key. We're going to be looking at that. Then coming into Jerome Powell, this is coming from a lot of sources. They're saying it is most likely going to occur this week, so we will keep our fingers crossed. But Biden is most likely going to announce his choice for Fed chair. He's either going to renominate Powell or he is going to renominate somebody else, and depending on how that plays out, that could get very interesting. So we will see. Then tomorrow, you're going to hear from Dallas Fed Kaplan. He's having a virtual town hall, but then we also got a report today. I'm going to try to get all of these for you if any of you want to go and look into it. The Fed members, they all reported their holdings just like some of the people in Congress do, and people saw that Dallas Fed Kaplan made over $1 million in trades last year, and he has multiple assets that he's holding over $1 million in stocks. Now, this isn't uncommon. His predecessor also did the same thing, had a pretty sizable balance sheet, and there is a couple of Fed members on who do have millions and millions of dollars of stock, but I would like to see what he's holding. I know he got a little bit of Amazon, GE, and some other ones, but that was interesting, and we'll see what sort of effect that town hall has tomorrow. That one could definitely be key. Then coming into more of the political side here, Biden, again, he called Ida's flooding in New York a warning of climate change, and he redoubled his push for the $500 billion public works bill. Then the Democrats proposed legislation after hours to push firms to auto sign up for retirement plans for their employees. So I think that's actually really good news, and it could just benefit everybody. So that was actually very nice to see. And then on the kind of reverse side, you got the initial tax plans or drafts are starting to come out, and we don't know which ones will be included in the final bill, but some people are talking about taxing unrealized gains, mark-to-market taxes, the carried interest, all of this other stuff. So depending on how those implications, this is part of what we're going to get here in September. This could really shock the market depending on what ends up in that final bill. So we will see what happens. However, I would not underestimate the amount of both Republicans and Democrats who are still quite just not really, they have their heads on straight. So it is kind of positive, because not everybody really wants to push for extremes on either end. There is still people in the middle kind of holding everything together from going too crazy on one direction or the other. So depending on how that plays out, though, it will be very important. And again, big key to watch here for September. Then after hours, NEO offered $2 billion of shares at the market offering. The stock dropped a little bit, so did some of the other peers, so we'll see how that plays out. On the supply shortage side, KFC said they wanted to advertise their chicken tenders, but they chose not to because they just can't even fill the demand already because of the shortage. So that one was very interesting. Then coming into Wynn, you probably saw it today, but they shot up, and the reason was they got a positive travel update from Hong Kong, and there was a big bounce in the Macau gaming revenue. So we were kind of worried about that with the China stuff. Again, positive China data. That surprised a lot of people, carried over into gambling. So overall, a net positive. And now coming into next week, Apple is set September 14th as the date to unveil its latest line of iPhones and other products, and it's all coming ahead of the holiday season. So depending on how this plays out, we will see how this stock reacts. And then as far as reactions, we saw a little bit of a move today, but Disney raised the price of Hulu by $1 on both the free and the advertisement supported one, or whatever they had going on there. So that sent the stock up. That was very good. And then same thing, Spotify, they killed it today. They were upgraded to overweight from sector performed by KeyBank on the basis that the industry dynamics appear favorable for music streaming. That's what they said. So they've been in the gutter. We'll see how that one plays out. And then finally, I thought this piece was just very, very big news, but AMC Theaters, they beat their 2019 holiday numbers for theater attendance on Labor Day. I'm saying it's huge because a lot of people, a lot of companies have been struggling to beat any 2019 numbers, especially if they're in the reopening trade, and to see AMC kind of highlight that. I don't think Airbnb has gone back to 2019 numbers. I don't think Uber. You could go down the list with the airlines and all of that. This is a huge beat. So the stock was up, but even when you try to look at the fundamentals and we went over the valuations, I think this materially changes a lot. So we're still in our shares. Hopefully it keeps going so we can sell covered calls, but at the very least, a very, very positive set of fundamental news for the company. But overall, it's looking like September is going to be wild and confusing. We got our work cut out for us, and anything can happen, so I hope you're ready. But that is pretty much it. So let us get into the plays. So right off the bat, I got 3 different stocks that I'm looking at coming in tomorrow. Got plays on 2 of them. One of them is going to be one that we went after a lot. Well, actually kind of 2 of them, but the first one is going to be TLT, and the puts may come back, but it all depends on how we react to this lower end of the range that we've pretty much been in the last 3 months or so, but specifically the last month. So the moves that we got for today are very hinting, and what I'm saying is that the puts may start to come back. I don't know if I'm going to make a play on it. However, it is definitely becoming appealing. I want to see how it plays here, because now this is that first level that I'm looking for. If it breaks below here, this could definitely change the trajectory here, but this is all related to what I just showed you at the beginning of the video here. If we start to get this idea, and then depending on what happens with tapering and all of that, but if the peaking growth starts to come back alive, yes, the Fed is going to have one thing, but don't underestimate, if the market really believes that growth has peaked, the bond yields are going to shoot up. So TLT going up means the bond yields are going down. TLT goes down, that means the bond yields are going up. So depending on how this plays out, I think it could get very interesting here if it starts to break levels, and then we pull it back to the 1 year. You'll pretty much see where we're at, and that's why I'm saying this level is key, because you bring it back up here, you could see how the market has reacted. So depending on how things play out in the next few days or even the next month, this could probably say a lot, but I'm definitely going to be keeping my eye out for that. So watch that. That's going to be the first play. As far as the second play, I'm going to be watching Viacom. So they got positive fundamental news today regarding their subs and growth, and that they're about 2 years ahead of their schedule. Again, they also have a bunch of the streaming services, some of the bigger ones, Viacom, big in media and all that. They definitely have exposure. It may be time to kind of unlock this stock with how it's traded, but you guys know the deal with this stock and how it moves, so I'm going to be watching it. We've played this a couple times. We got to play on just some of these small moves. It still moves big. I haven't looked at the premiums, but depending on how this information and the news comes out, I think it could be good. You've seen Disney, you've seen Netflix. Again, they would have had a really good opportunity, except Billy Huang kind of messed things up, and you see where they're at this level. So depending on how things play, this one could get interesting. I like it. I think there's stuff backing on it, but just as we've seen the stock move before, I don't want to get my hopes up too high, but I'm definitely going to be watching them coming in tomorrow. And then finally, Ford, baby. This could be some value protection depending on how things play, if we start talking about growth peaking, and then depending on what it means for the reopening trade and value, we've seen EV kind of been a bright spot, or at least in China. It's part of the ESG trade. It has all this support, so I'm really, really liking it. But overall, that news today of hiring Mr. Field, it is being called their watershed moment, so could be good for the long run, and it could be good to play as far as just the short run too. But I already got those shares, so I want to watch how this one plays out, but I'm definitely liking what I'm seeing out of the company, especially out of today. But those are going to be the main plays. As far as everything else, watch Netflix. They were one of the leaders today. Those old leaps that we had came back to life, and even watch Disney. That one play that we had also came back to life. I was a little bit surprised on it, but I do actually, let me see it. The premiums actually ended up coming down 30. They came to break even slightly up, so with how this stock is moving, it could get interesting, and I definitely think we might find some opportunity there. So watch out for Disney. I like that one. Then Altria, their ex-dividend, I believe, is coming up here. They ran up, but you could even see they're coming back to this level from when there was all those menthol bans and all of that. We talked about some of that upside that they have with some of their buyouts and everything else, so it's putting them at a key level. I really like where they're at, but just going to be watching them if we see strength in the Dow and any of that value rotation. I definitely want to keep my eye out for that. Same thing even with Abivi. They just keep dropping here, so still really like the company. I want to see kind of the washout that it has depending on how it levels out. Kind of think about how Uber played out. That's going to be the key to watch, so watch them. And then Wells Fargo, the premiums are still up. I would have double dipped today because I thought the premiums would have got clapped, but they didn't. We're still up 30% on those October, so depending on how this situation plays out, it's not over just yet. I would watch them. And then Airbnb, they shot up today. I believe the next level is going to be 170. They were up towards like 165-ish, I think, or they closed towards the high, so they were doing pretty good. We got them in our long term, so still going to be riding, but definitely watch them. Even airlines and everyone else did good. And then don't let me forget, we made some long-term positions today, and this time I did them all on my sister's account. So this is the new long-term that we made. This one only has $1,500. She did make the $200 deposit for the beginning of the month, so I only had Airbnb. She's up 11.5 on that one. So today I grabbed 10 shares of Uber at 40.88, establishing another growth position. So we got 500 in growth on Airbnb. Now we got 400 on growth in Uber, and then I put $500 worth minus the $2 loss on UWMC to get some dividends. So got to make those two trades, and now we've established a 60-30 base on the new long term here. So hopefully you are following along and got your free long-term alerts, baby. First link in the description. But we're going to keep our eye out for there. All long terms now have been deposited and exhausted, so we have to wait for the next months. But coming back to the rest of the plays, watch Boeing. They dropped a little today. They kind of held up better. I'm sure they added some pressure to the Dow, but I want to watch if they break any of these levels from here. Coinbase, I mean, with everything that happened, I want to see what happens with any of the Bitcoin stocks, even a potential put on MSTR, we will see. And then Novax, their daily chart looks very interesting. They're coming alive here, so you could kind of see where they're at. We've played these run-ups a few times. It could lead to another move. There was a lot of call sweeps, even BNTX, BioNTech, so Delta concerns are still up there on the chart, so keep your eye out for them. Ford, like we said, and then DraftKings, they definitely led the way today. They're coming back to the higher end, so I really like it. Somebody asked if it's too late to grab shares. I don't know if you want to grab the shares. One thing I did when we owned a lot of shares and the price kept running on us and we kind of felt like we missed out, I grabbed the leaps, and the thing is, the leaps are still a little bit cheaper as they've decayed, given that the stock really hasn't moved over the last year when you look at it. So keep that in mind, but I'm definitely going to be watching them. And then, like I said, maybe a potential downside play on MSTR. Some people were saying that the S&P might remove them, but just in general with Bitcoin and everything else, I think they're going to be one to watch. And then finally, I have AMC up here. Again, that news was just overall very, very big, and I liked it. But now the TLT and the dollar, we've already talked about most of it today. The dollar went up for a few reasons today. This was the first run up in a minute, or the biggest one even in a couple weeks. So we will watch how it plays out. But the real question is now, if bonds fall, and do they fall out of this range? And if it does, it might bring on some more ominous implications as to what it means for the economy. So I hope you can read it, and I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember the problem ain't going to get easier, but you are going to get stronger. But the code loves you. I love you. I'm going to see you in the morning. Let's go.